This video is sponsored by Bityard. With over 400 cryptocurrencies to choose from on their spot exchange, dozens of USDT pairs for futures trading, perpetual coin futures, trade commodities like gold, silver and oil, Forex, and major indices like Nasdaq. You can buy crypto from Bityard with over 50 different fiat currencies, using Visa, MasterCard, Google or Apple Pay. If you like, you can use their copy trade facility, follow other traders who will execute trades on your behalf, or become a copy trader yourself. So if you want a bit of that, click the link in the description. Hello everybody, welcome back. We're going to have a look at Bitcoin. We're also going to have a look at traditional markets as we enter the day of the FOMC meeting, where everybody seems to have their bullish hat on, and fair play to them. It's worked in the past. It's a tradable event, but it's also a bit of a gamble. But it all depends on what they say, what they're going to do. I think the expectation is we're going to go for a 0.5 basis points, 50 basis points, so 0.5%. I think that's the general vibe. We've not got inflation data until next month, so we'll just carry on with the trajectory. Is going to damage markets in the short term, but markets are already damaged, aren't they? So let's continue with that. Nasdaq can certainly sustain further downside and still maintain what I would consider a relatively healthy pullback, despite the size of it. Individual stocks inside the Nasdaq obviously don't feel like that, and this is leading me to believe that they've already capitulated to a much larger extent, and it's only the big boys like Apple and Tesla and Microsoft that are holding it up. Some of these other ones, the big ones like Facebook or aka Meta, Snapchat yesterday completely wrecked City, Netflix, PayPal all gone to wrecked City, but the absolute behemoth, massive big boys have not yet capitulated, and probably won't. They probably won't, not to those extents, and that's what's allowing the Nasdaq to appear a relatively healthy sized pullback. If we go back in time, we see that we've had this in the past. It's no big deal. This is your financial market collapse. Obviously that's a different ball game altogether. But generally speaking, when we have had pullbacks and consolidations, it's your 200 exponential stroke 200 simple that gets picked up. A lot of the time we get picked up prior to that, but if we do look at the occasions where we've dipped down into it, front run that 200 simple, hit that 200 simple, and again, big pullbacks down into it, front running those 200 simples, front run the 200 simple and exponential, hit the 200 exponential, and we are now approaching 200 exponential and 200 simple. Now, it doesn't have to hold here, of course not, but I think if we were to think about a general area of the Nasdaq pulling down back into over the next month or two, then another drop to the tune of about 8% or so from where we are right now, that's okay, and it still would match what I would consider to be a healthy chart for a chart that is up only. Remember, there are some charts that are up only, and this is one of them. Participants in traditional markets will see that as that's what it is, and you would want to take part in an up only chart. Again, all the big, I say big, I mean they are big. I mean look at this wrecked City. This makes you feel a lot better that you're holding Bitcoin, I suppose. Opposed to something like this, that is a fine retracement, 84% in a very short space of time. We've had the same for Netflix as well, PayPal, and even the mighty Meta did similar sized moves. So everybody's waiting for the ultimate low, right? And that's fine. I can get that. And again, I'm still in a 90% cash position when it comes to my stocks and shares, but there is a point where I'm going to have to start to get back in, and I think I'll start to get back in as if and when Nasdaq approaches those levels. Now, this is Nasdaq's pre-market. Still not particularly happy right now. We do have bullish divergence on the daily with a potential tick take place on that histogram and MACD. But outside of that, nothing particularly good. So the bullish divergence is one thing, and that could lead into a positive effect on the FOMC meeting. I think the one thing that we can take home, though, is whatever it is that they decide to do, volatility is guaranteed. It's going to be a very difficult thing to margin trade, I would say. But if we were to move up and we were to have a sustained move up, the most it could ever go for Nasdaq would be a 23% move, which is obviously part of this descending triangle, which is diminishing every day that goes by, every week that goes by. We're still within grand consolidation anyway, so we can't get particularly clever unless of course you're looking to buy and hold like an investment. It is an up only chart. So let's take that up only chart business to the other up only chart that we know and love, which is Bitcoin. So this is Bitcoin here on your daily. 10 exponential being your main problem, which matches more or less the 50 exponential moving average on the 4 hourly. But I'd say that the daily 10 exponential is your main thing, but the 50 exponential also has relevance to it. So there's not much between it. It's 29,900 on your 4 hourly and just short of 30,000 on your daily, which is a nice round number, which people like because we're simple beings, and you know, despite all the amazing things that we've done as a society and a civilization and a species, we love round numbers still. We just can't get enough, and we absolutely love them. And that 30,000 is an example of a round number supported by moving averages on 2 time frames, which is, you know, pretty relevant. So if we break from that, I'll be looking for us to revisit probably if we do get through the 21 exponential, which is 31,500 give or take, we go into this box, which at the top of this very box today is the descending trend that we've been stuck beneath for over a month now, right? So there is a chance that we do rally, and a rally could yield about a 14% move up to the top here. That is a possibility. I'm not saying it's likely, it's definitely a possibility. But just like Nasdaq, we are in a descending trend. It's a consolidation pattern. It's a descending triangle. So we should expect to get rejected at the top of it, as we have in the past. But at the moment, we are at the bottom of it with what could potentially be bullish. So it's not bullish news, but a bullish effect, basically, due to what the old men decide to say later on today. So we'll see what happens. Again, you know, the grand picture is we are still consolidating. We're below all major moving averages on all time frames, more or less, of significance, at least the bigger ones. And so we should expect it to always get rejected rather than break out. Now, if you watched the video I made last night, it was just a clip from my Patreon channel talking about how I think the bear market could have already ended or is due to end really shortly. And if we take away all the aspects of price, so forget about this portion over here and focus on just volume and time, it does match the end or coming towards the end of a bear market. It sounds crazy. You'll have to watch the video. I don't want to repeat myself. And to be honest with you, until, you know, we'll have to wait and see how it plays out. It's all based on a weekly, so it's gonna take a while. I'm not saying that we can't come down to revisit these lows or even maybe make some new lows. But if that were to be the case, I'm not looking for huge, massive moves on top of what we've already got, because if my time and volume analysis is anything to go by, it would suggest that we're basically approaching the lows, if not already hit the lows. When it comes to time as well, it would also suggest that as well. There is reasons why market cycles could have completely changed, and it would also tie into why we're consolidating across the board for all markets, traditional and crypto at the moment. We all know why it isn't, which is exactly the same reason we're all trying to listen to what the Fed say today. So let's not kid ourselves into thinking that market cycles can trump old men, because old men basically rule the world. So yeah, I'll leave it with you there. There's not a great deal more to say about it. It's going to be a volatile day. We'll wait for what the old men have to say for themselves. Personally, I think that it's got a very strong likelihood of breaking up rather than down, but I'm not married to that concept. I'm more for Bitcoin. I'm more into the idea of continuously buying the lows if and when new lows get formed. This is a strong low though. We've got historical relevance here, summer lows being picked up here, and so far we've managed to, apart from this, which could have been the capitulation wick, we've managed to hold the summer lows again still. It is a big zone. This is a strong area. You know, it's not going to give this up easily enough. But for the moment we are just basically scraping that 29,000 every other day with an idea to potentially pump up to this resistance and then back down to it again, and maybe break out, or maybe break down, either way. But if like I say, if you watch that video I made last night, then it'll give you a little bit of food for thought to think about it maybe in a different light. Sometimes we can be blinded by the continuous breaking down of candlesticks and moving averages, and then sometimes taking yourself a little bit outside of the box and thinking about other components that make up a chart and make up decent signatures of a chart. It might give you a little other insight, or it could just be a red herring. But I'm all for it, to be honest with you. I'm all for it. That's why I thought I'd make the video. You know, I don't watch other YouTube channels, and I can't imagine anyone else is really thinking about it in that respect. But please let me know if they are, because it'd be interesting to see if anybody else has actually thought about it in the same way, which is that effectively a bear market's been in place since we reached this peak over here. And despite having higher highs for price action, volume has been declining ever since that level, and momentum has been leaving as well. So interesting. This is on your daily, but obviously it's more apparent on the weekly. Anyway, I won't repeat myself. If you want to watch the video, watch it. I tried to put it out as simple as possible. It is relatively simple, but it requires you to forget about price and think more along the line of time and volume. And the price side of things should be ignored, and we should only really be focusing on time and volume, which would suggest that we are likely to have already hit or are approaching a significant low, marking the end of a bear market, which again is not what the majority are saying, and that's fair enough. Anyway, thanks for watching. Hope you have a nice day. Take it easy.